All right, great. Good morning, everyone. My name is Alexandra McGarris, counsel at Venables New York office. Have been with the firm for 10 years. My practice generally focuses on regulatory enforcement action defense, but I also wear a compliance hat for some of my clients, especially after they've entered into enforcement actions with the various regulators in the consumer protection space. I am very fortunate to be joined by 3 compliance professionals. I'll let them introduce themselves that have a variety of different experiences, both before they joined their current organizations and then now as their respective organizations' chief compliance officers. I will be serving as moderator. Hopefully we'll get a good discussion, maybe some disagreement, but I know we're going to get different perspectives from each of them given the size and complexity and maturity of their respective organizations. So I will first kick it off to Brian to introduce himself, and then I will start throwing out questions. We will take questions from the audience for the last 5 minutes of our session.
So I'm Brian Waldo. I am a compliance executive for Bank of America, supporting their global wealth and investment management business, which is mainly Merrill Lynch Wealth Management, U.S. Trust, and some other organizations we have within there. Currently, my main focus has been on U.S. Trust, which is the bank's private banking operation, and also the GWIM CIO office, and also some major regulatory projects such as implementing the DOL rule, the DOL fiduciary rule. But prior to that, I was in the legal department for the bank, and prior to that was in private practice and at FINRA.
Good morning, everyone. So my name is Paula Tuffin, and I am the General Counsel and Chief Compliance Officer for Better Mortgage Corporation. And I've been there for about 2 years. We are a startup mortgage origination company. Prior to joining Better, I was in the enforcement division at the CFPB. And prior to that, I was a partner at Mayor Brown in the city doing white-collar defense, which was an outgrowth of my earlier career as a federal prosecutor in the Southern District of New York. So I have a lot of law and order in my background.
I'm Mitch Hochberg. I lead compliance for Marcus by Goldman Sachs, which I joined in early 2016 with sort of the beginning of building of Marcus by Goldman Sachs, which is Goldman Sachs' retail consumer banking operations. Before that, I was a co-founder at Fenway Summer. I think you've heard from some of our colleagues in the Fenway Summer businesses, sort of starting consumer finance operating companies in mortgage and credit card, and building an investment fund to invest in various opportunities in fintech and regtech. I joined that with the former deputy director of the CFPB, Raj Date, from my work at the CFPB, where I was senior counsel in regulations. I was at the Federal Reserve for about a cup of coffee before the CFPB, was in private practice before that, doing sort of litigation all around secondary markets and consumer finance. And so sort of a varied career in various consumer finance problems.
So one of the goals, I think, out of this session is to give the folks in the audience who obviously have something to do with compliance at their organizations some practical strategies, tips from the folks on this panel. We're going to focus on kind of process, systems, and things that can be applicable to any organization that has a complex regulatory footprint. And so I'm going to first ask each of you to just give us a brief overview of the functions and departments you oversee so that we can have kind of level set in terms of size, complexity. Every organization structures their compliance function differently. How is it at Bank of America, Merrill Lynch?
So within GWIM, within Global Wealth and Investment Management, we have roughly, I'd say, 100 to 130 compliance folks within that group. And those 130 compliance folks are responsible for implementing the compliance program. And we have a very regimented compliance program where we set out from the top at the enterprise level, what are our 9 elements of compliance that are responsibly to be carried out by a mixture of the frontline units, the compliance department, and also central areas of coverage throughout the bank. So we'll look through, in that compliance program, regulatory inventories, regulatory change management, policies, monitoring, testing, risk identification, training, all the things that you'd normally associate with a compliance program, plus things that fall outside of those 9 elements, such as tactical and strategic advice and guidance, regulatory relations. But so we have those 100 folks, 130 some odd folks that work with other areas of the bank that focus on special, regulations like Reg W or Volcker and help supplement the coverage. My personal team is roughly about 20 people, and that supports kind of, again, the private bank and the CIO's office. But again, we have other areas within the bank. We have a separate team that does testing for us. So we are the test owners. We draft the tests, but we work with a separate department that executes on the tests and reports back to us. So in a large organization, we attempt to try to get efficiencies by grouping certain things together to support the CCOs in the front line and helping support the business.
And Brian, who do you report to?
I report to the head of GWIM compliance. It's a woman named Gloria Greco, and she's the chief compliance officer for Merrill Lynch, Pierce, Fenner, and Smith, which is the main broker dealer that supports the bank.
Okay, Paula, so you used the word startup in your intro.
Yeah.
Magic words, yeah. So how about your organization?
Right, I kind of understand why I'm seated where I am, because we are certainly at the beginning.
You're like 130.
Right, I was like, wow, I was really impressed. So we obviously are a much smaller organization, and in the startup world, everyone wears multiple hats. So I like to think my entire compliance team is comprised of everyone in the organization. And we are growing, though, at a rate where now it's starting to make sense for us to build out we have a very small team that's devoted to compliance, which includes me. I have a compliance associate, and also 85% of the time of another paralegal and a full-time paralegal. So we are actually growing our team. I expect by the end of this year, we are going to have 10 people in the compliance function at the company. But until that point, what we do is leverage our relationships with each of the other functions in the organization in order to make sure everybody's up to speed on exactly what compliance means to us at Better. And I'm fortunate to be in an organization where from the top down takes compliance and the regulations we live under very seriously. So we have that culture, which has helped support the willingness of all the different sort of functions in the company to go to trainings, to ask questions, to bring things that look unusual to my attention or to someone on my team's attention. So we sort of handle, we have our CMS system, which we are always modifying to make certain that it is actually matching how we are actually functioning in operations. We rely also on third parties to actually help us do some of the testing and evaluate because our team is just so small. So it's a combination of making sure that the employees in the company are up to speed on exactly what the guardrails are for their particular function, making sure we are open so that they will come to us and bring us issues that we can't see because we are small, and then relying on third parties.
Paula, you also serve as the general counsel
Yes.
of Better. So is there separation? What you just described, is that when you say compliance, does that include the legal department, or do you try to maintain separation?
Well, there's certain things that are obviously separate, but as I said, you wear multiple hats in a small company, so it's very hard for me in my head to parse. So when I'm looking at and reviewing contracts, I'm thinking about them from obviously a legal perspective and a risk perspective, but also thinking about, what implications is this going to have on our, operations and our regulatory life. So it's a bit of a melding. As we grow, when I came in, I knew that we would get to a point where obviously we would separate these two functions. We're just not quite there yet. At the rate of growth we have, I think we're going to get to that point sooner than expected. But at this point, if you want to know how I think about it, I think about like contract review, product evaluation as falling on the legal side, and then of course our government relations efforts and those things. But for training and sort of day-to-day review to make sure we are producing loans in the way that's compliant with each of our state, regulatory regimes as well as our federal rules, falls under the compliance side of the house. So we have a vendor management system. We have that falls on the compliance side, as well as our complaint monitoring, sort of the regulatory updates. So all of the sort of functions that you would think of as compliance, I tend to think in my head as compliant, but as I said, it's hard to divorce my legal training from the work I do as the compliance person.
So, Mitch, when you answer that question, if you could also give us maybe a 1-minute spiel as to what Marcus is in relation to Goldman Sachs, because I think everyone knows what Goldman Sachs is.
Right.
I'm not sure if everyone knows what Marcus is, but even if they did, is it a brand? Is it a separate company? So that helps kind of set the stage for what you're going to describe as your function there.
Sure. So it's not a separate company. It is a brand of Goldman Sachs Bank USA, which is one of the many legal entities within the broader Goldman Sachs Group, Inc. And this was all a lovely little education for me as I joined Goldman Sachs and saw, how to build a startup of a consumer banking enterprise within the institution that is the larger Goldman Sachs, right? And so because Marcus is a brand of Goldman Sachs Bank USA, we are, it's exactly what you would expect from sort of traditional banking products, right? When I started, we were building our unsecured consumer loan product. That's a fixed rate, closed-end, $3,500 to $40,000 consumer loan, all digitally enabled so that you can apply online and receive your decision and funds quickly for Main Street retail consumers. Interest rates between 6.99% and 24.99%, with all based upon creditworthiness and the ability to consolidate higher interest debt, right? So why revolve on more expensive debt and pay the minimum due when you can actually get a product that's much cheaper to be able to refinance that out? That was the start into our enterprise as Marcus. As of in April of 2016, we purchased a deposit base from GE Capital Bank, which introduced online savings accounts and CDs to Goldman Sachs for our retail consumers. And as of December of last year, that was integrated under the Marcus brand together. So if you go to our Marcus.com website, you'll see both unsecured personal loans and our savings products. And as of about a month ago, we purchased a personal financial management app called Clarity Money to be able to provide insights and information to consumers to help them better manage their financial well-being. And so we continue to grow from there in terms of what Marcus can be in terms of the relationship that we can build with consumers sort of simply and transparently through understandable product offerings.
And so talk about now your function, your department, what you oversee, and like the size of that department.
Sure. We operate 3 lines of defense model, right? Business is line 1, compliance line 2, internal audit line 3. I've come from, what's nice is I kind of straddle, the world that Paul lives into where Brian lives in terms of how do we take this from small to being able to fit within a larger org. My personal team is around 15 people to be able to cover the divisional side of this that fits into a broader consumer compliance function of around 30. I report to the global head of consumer compliance because obviously, even away from our retail activities, we have consumer obligations within our private bank lending. We have it in some of our secondary market activities and across different revenue divisions in terms of merchant banking or investment banking, which is consolidated through our global head of consumer compliance. But in terms of the retail side, so 15 for me, 30 broader consumer org. We then have bank compliance personnel who focus on a lot of the Reg O, Reg W, various other core banking regs within Goldman Sachs Bank USA. We have our financial crime compliance team, which obviously brings people to the table there. And so that all fits within a global compliance org that's approximately 1,000 employees. And so lots of different it's kind of the experience was, how do we build, retail consumer was new to the firm. How do we build a compliance function for a totally new business line for the firm, where we get to sort of innovate for how we want to build our compliance operations, our compliance culture, our mode of interaction with the business from scratch, while also being able to draw on all the benefits, infrastructure, and expertise that sits within the broader firm and do that. Like the challenge and fun for me was building a strategy for how to accomplish that in a way that deals with, that's able to make progress in the business, move forward, actionable decisions, while also being able to harness that expertise is, simultaneously, difficult and exciting.
So I'm going to stick with you, Mitch, because you were describing kind of the evolution of the Marcus products, from the loans to the savings products. So let's talk about introducing new products to market. Sure. At what point at Marcus is compliance involved when the business folks are thinking up or about to launch a new product?
Yeah, we're involved day one, right? And so we work through Agile tech development. The people on my team are sitting in squad meetings with technology, with product owners, with the business side, as they're sort of ideating on the product or developing tech specs. Now, obviously, it's, hey, this will be a core API specs meeting. Cool, you guys go do that. But at the same, but anytime we want to be at the table sort of every time people are even just throwing out ideas of how are things working, so as to be able to identify, okay, here's the advice and strategy that we can be able to provide in line to you now, so that you know what's going to be workable and what's not workable, sort of set rules of the road to be able to have creativity and paint within, and then be able to go from that to then undertake those learnings and say, okay, what's this going to mean for my control environment? What's this going to mean for training? What's this going to mean for testing? What's it going to mean for our quality control scripts? What does this mean for our risk and control assessment? So that we then kind of get those learnings up front, be able to build our processes off of them, and be able to provide effective oversight. Provide the strategy up front and then the effective oversight on the back end when we're operating.
Paul, if you could take that same question, and then one step further is, how do you get the business folks to include you on day one? Because the answer is always going to be, we should be there at day one. It's, is it cultural? Is it norms? Is it mandatory? How do the folks that are dreaming up these big ideas, how do they know, or how do they, how do you connect that to your organization?
Yeah, no, it's a great question. And certainly day one is when we want to be involved. And most of the times we are in better, because again, we're still a small team, and so we're small enough. And I sit on the executive team, so when new ideas are coming up at that level, I hear about them. But even more importantly, part of what I do all day is develop relationships with the people in tech, with the people in mortgage operations, with the people in marketing, so that I always have a sense of what's happening in the company and can provide that advice moving forward. What's interesting to me now is how I build out my team, so that as we grow and that more of these decisionings get made further down in the organization, that there are enough legal compliance people to push out to those places where the ideas are going to start originating. As I said, we started out, when I started the company, there were, I think, 50 people in New York, and now we're up to 100, and the company has over 200 now. So we're at a place where the ideas are coming from a wider spectrum. And so one of the challenges I face is, how do I build my team in a way that we can maintain the type of relationships that we have with each of the functions, so that they feel comfortable bringing us in right at the beginning, and so they know that we are not going to just immediately come in and say, no way, you can't do that, are you insane? And actually try to work with them to figure out how best to implement what their ultimate goal is. Again, I always try to emphasize to people that it's always better for you to bring us in early and talk at the beginning, so that you haven't gone down the road, have a completely, formed plan, and then for someone in my group to say, no way, we can't do it. So it's always better for us to work together.
It sounds like for an organization your size, being exposed to the folks, being, near in proximity and in touch. You mentioned relationships,
Yeah.
being present at the meetings and kind of having, your ear close to everything so that you can insert yourself and say, raise your hand. Brian, I assume that's not an option. You can't meet every tech person at Bank of America, right? So I assume it's much more institutionalized. And I know the concept of bringing a new product to market for you is very different than someone.
Yeah. So
Talk about how you look at that from your perspective.
yeah, so I agree. We always want to be brought in early. We want to be able to advise on things, and the organization is so big that you have to have those institutionalized, I call them speed bumps in the process. So obviously we have our committees, we have our new product committee that will review everything, all the business case analysis, the risks, the benefits of it, the viability of it when you look at revenue versus risks. But we also have, even before you can get to that committee, a viability working group where risk, legal, and compliance, along with the business, can kind of say this is a go or no go in terms of something that's even eligible for the product approval committee, because maybe it has additional risks with it, but it's kind of like a speed bump. And so if additional work needs to be done to say you haven't addressed these risks or these additional things, that's that speed bump to make sure that the business goes back and addresses the issues so they don't end up going to the committee and the thing gets blown up right in front of the committee. But again, going back to the point is we want to be involved early, and that's why we align ourselves with the different business units. We have regular meetings on strategy with the business and understand what the leadership team is looking to do. I think just a second point is the bank requires strategy documents for each of the lines of businesses to go up to the board on a regular basis, and as part of that, risk and compliance are required to review and comment on those as well. So we see kind of the picture of where they're going over the next 3 years on a quarterly basis, and we get to have insight in how that is going to be executed further down the line. So we have that 10,000-foot level to understand what they're looking at, and then we also have kind of the tactical looking at it from a viability perspective, and then also from a committee perspective, the new product committee and all of its subcommittees, which the things need to go to even before it gets to the new product committee.
So all of what you just described at an organization of that size, a lot of committee structures, I assume there's a lot of approvals required for something to go to the next level. And it also sounds like it's iterative, so it doesn't just go up, it can come back down, reassessed, reconsidered. Describe how you leverage technology to do all that. I assume a lot of the approvals and controls are not, handled by somebody with an Excel sheet or, with their pen and paper. Talk about how technology helps the compliance function and the whole entire organization, get all these approvals and things that need to get done.
So when we think about, how to mitigate risk, obviously you want to be able to have as many controls as possible to mitigate that compliance risk. But at the same time, you recognize that not everything can be automated, and you'd love if everything could be built and automated and kicking out exceptions. And so there's a mixture of automated controls, but also manual controls. And so as we think about the compliance program, we also think about if it's going to be a manual control, what is kind of the quality assurance process that's going to be done behind that to ensure that it's operating effectively. So, it's not just compliance coming in and saying, did it work? The frontline unit, so the business unit, that first line of defense, has that primary responsibility to ensure that the controls are operating effectively. And then we as compliance are conducting oversight into that process. So technology, if money was unlimited, everything would be automated, but it's a cost benefit on what really needs to be automated. What can we do that is manual with the right oversight routine by the business that compliance can monitor at some point? So working through the lines of defense that way.
Paula, so you started with talking about kind of the challenges that you face given a rapidly growing organization. Behind in a speaker's lounge, you were talking about your licensing regime and how fast that's grown. I know just staying on top of those requirements in and of itself is extremely burdensome and challenging. Talk about what keeps you up at night when you think about the growth that Better is experiencing and will experience.
Well, probably at a fundamental level, what keeps me up at night is as we grow and as we scale and as we hire, are we bringing in people that have the same commitment to rule following that has sort of characterized our hires up to this point? Because in my worldview, which is, as I mentioned before, I've had kind of a law and order background, so I like people that follow rules, at the same time who are also creative, but they have to have an idea that, okay, if there's a line, we're not going to cross it. And that's consistent with Better's philosophy, which is we are looking for a stellar customer experience, and part of that experience is making sure that we are complying with all the regulations so that we can continue to provide the service to folk. So when we think about how we're hiring, to me, it's very important that we bring in people who are of a similar mindset and are willing to learn the rules of the road and follow them. So
How do you
that
vet for that?
concerns me. And that's interesting. I mean, so we've been doing this for a while, and we have internal hiring at Better. And so one of the sets of questions and the sets of inquiry has to do with, what is your ethical, standard? What's your ethical compass? And obviously, it's an imperfect science, but we do our best to figure out what the, sort of North Star is for people as far as operating in a highly regulated environment, because that's what we do. So we do our best to try and vet that in advance and look for it after people come on board to make sure that we can address any issues, as quickly as we possibly can.
It's just interesting because a lot of people think when you're going to hire for compliance, you're looking for a skill set, and that's the primary thing that you're doing. Oh, someone who knows X. And at least my take is it's more important to get the right people on the bus and develop the skill set. And you want people who have that intellectual curiosity, who have, that think things through logically. But once you get the right people on the bus, you can move those people around into different positions and train them across an enterprise. Like, with our company, there's a lot of movement from one place to another. And that's why it's so important to get the right people on the bus first, as opposed to, I need someone who has this particular skill set, and I'm going to put them, right here. But that's the most crucial thing about a compliance program, is getting the right people on the bus.
Yeah, I couldn't agree with you more about that.
Mitch, when Paul and I were talking in the lounge, she mentioned how fun it is to get on the ground level of an organization and kind of build this from scratch. You're coming into an established institution, but also kind of building something new too. What are some of the pros and cons of having Goldman's, larger infrastructure that is accessible to you? And what are some of the challenges of that? Is that kind of sometimes box you in, given how different this business line is?
Yeah, no, it's been on balance. So I've loved the experience on balance. Okay, so I've had a lot of freedom in order to build what was appropriate for a consumer business from scratch. But as we grew, you're looking at that and saying, okay, we're developing some rhythms and best practices here and doing things a little bit differently. How do we then export that out to the rest of the firm, right? Marketing compliance, quality control, privacy, right? Things that less, Goldman didn't have a Facebook page when I joined, right? You're a consumer business, you need to be on Facebook, right? Like, that is new for the firm, right? Jojo Fletcher is an influencer now for Marcus, right? These are things.
How long did it take to get the Facebook page approved?
A couple weeks.
Okay.
Yeah, which was a lot of socialization, right? And it's kind of explaining what we need to do, and here's the control environment that we're going to build around it, right? And then putting a team in place and just thinking through the controls there and saying, okay, like, we have a process, it's working, right? Now it's got to become more scalable, we'll figure out how to adapt that, and now there's other businesses that want to be able to draw from these things too. How do we then export that out to the rest of the firm? And then what are we importing in is Like Goldman Sachs has outstanding talent, right? Would I be able to, just the ability to attract people who are interested, who are engaged, who are then, able, you want, what I love about compliance is that you're touching, people in the business have their own various functions that they're working on. We're touching everything. Like fair lending is touching marketing, is touching credit policy. Privacy is looking at across all data, right? Like there's fair lending, there's privacy, there's the actual product offering itself, and UDAPs, and servicing, and collections, deposit rule. Like all of these things like transcend pretty much every element of the product feature stem to stern. And so we become an area where you can develop expertise in lots of different components of providing a consumer offering. And so the ability, I think, you want subject matter expertise to be sure in certain areas, which can be taught and developed, but then the sort of that engagement, creativity to move around, right? And so people and culture, like I guess the last thing is sort of culture, right? Goldman Sachs prides itself on its risk management, right? And being strong, effective, and quantitatively driven risk managers. How do we then essentially, the opportunity to build a consumer business within that culture is outstanding because you have the support of the firm day one to say, we're building a franchise for the long term, right? This is something where we're going to address it conservatively. We're going to have practices that at other places I might get more pushback from the business, but are recognized culturally at Goldman as, we need to do this because it's the right thing to do to build for our consumers and to build this franchise for the long term. And so that support behind a new function to then say, make sure that to essentially have that, not a concept of, oh, well, the business will just risk accept that. You'll be fine, right? Oh, everyone else does that elsewhere. We're okay. Well, cool, but we don't have a legacy infrastructure on that, and so we're going to do things differently, and we're not comfortable with that practice, despite the fact that it might be pervasive in the industry, so we're not going to do it, right? And that's accepted, right. And the rest of the firm empowers that seat at the table day one, the ability to have that viewpoint, and then to be able to inculcate that in the product is kind of what makes it special about doing it at Goldman.
Sounds like best of both worlds a little bit.
It's been from that I've enjoyed in the experience.
So before we open up to the audience for questions, I want to shift a little bit to kind of how do the external environment impacts your job. So obviously there's been a lot of change from the regulatory bodies, the change in administration in Washington, D.C., the way the states have reacted to that. I've certainly served on many, many panels and spoke on this topic for the last year plus. So now we're sitting, 16 months into the new administration. How has the shift in the regulatory environment impacted your day-to-day job, if at all? And I'll start with Brian.
I would say, it's going to have an impact, but it shouldn't have a material impact because as a firm, as a company, you need to set your strategic direction across all of your activities, and you need to basically say, and I'll give an example, the DOL rule, right? So obviously that rule, the fiduciary rule, was overturned by the courts and not appealed by the administration. And so a lot of people, you see a lot of people in the street looking at the rule and saying, well, what do we do now? The issue is, what was your strategic direction before that rule happened? How did that rule impact this? And do you think you need to change any of the strategic directions? My view is, from how I see the bank looking at it, is our strategic direction is, we embrace a higher standard of care with regard to personalized advice provided to wealth management clients. And so that's our strategic direction. The DOL rule and changing that just adds a little bit more flexibility on how we want to implement that, but our strategic direction remains the same. So it's not like you're setting your strategic direction based on what Washington says today or what Washington says tomorrow. You take the direction, you may have to adapt it based on what's happening in Washington.
Otherwise, you'll have whiplash, right?
Yes.
Yeah. No, I have to agree with that perspective.
Do your business people, though, agree?
Well, our business, well, so I spend a lot of time saying just because, things have changed in DC doesn't mean that those rules that have been around for years have disappeared, right? The rules that apply to mortgage origination in our case, are still there. And certainly state AGs are stepping into the breach to the extent there is one left by the change in direction of enforcement at the CFPB. So from a regulatory perspective, we still have to adhere to all of the state regulations that govern the origination of our product, and we still, have to adhere to the federal rules. So if we think about it in the long term, there are always going to be shifts in who is in control in Washington and maybe shifts in direction. But generally, if your focus is on making sure that you're serving your clients in the best way possible, then that's going to, support the idea of adhering to the rules that are in place. So from a compliance perspective, that's how I think about it. When you think about from a strategic perspective about how you want to influence things, if you're talking about if I put my lawyer hat on and we're talking about, government relations and how that department works, that's going to be a little bit different.
All right, Mitch?
Yeah. No,
Last words.
No, I don't think you make any change based upon, sort of winds blowing in DC or elsewhere, right? It's like the winds will blow, like the pendulum will swing back the other way, right? It's just stupid to go try and optimize for local or for these sort of local optimums in terms of sort of where you are in the spectrum. I think what kind of concerns me though, so that's our approach, right? And culturally we disseminate that approach, and I think that hasn't even really been a question. What concerns me is sort of exogenous to us in terms our institution, right? Which is the lack of strong oversight. Not sort of maybe it's coming from the fact that it's formally at the CFPB and a regulator, but the lack of strong oversight elsewhere in the market creates the opportunities for players doing inappropriate things to pop up and be able to continue those, and that's where it creates the pressure out there, where you start seeing bad actors doing A, B, and C practice, and you're operating in the same competitive environment, right? The sort of the cop on the beat, the oversight that comes with making sure that everyone's playing by the same rules and doing what's appropriate for consumers at all points in time inures to the benefit of the entire industry in that regard. And so to the extent we lose some of that, I think we're all worse off.
Yep. Okay, I think we have time for one or two questions from the room. All right, front row. Is there a mic? Hold on one second.
Thank you for all of your insights. Mitch, a couple questions for you that I found provocative. You mentioned that having the best of both worlds is the thing you like about your job. I'm curious what you don't like about your job. And also, with respect to Facebook, you got a Facebook page up for Goldman. What are you doing to protect against some of the dangers that I think we've all read about with respect to Facebook?
Sure. Look, if it hasn't come through, I love my job and I love what we're doing. I think part of the challenges that we deal with is it's a large institution, right? There's an expectation, just any type of, we have a couple different cultures all coming together, right? When we either people we've brought in who come from other consumer enterprises, or including myself, right? One of the challenges I had coming in was translate for Goldman culture for being in a consumer business and translate for consumer business folks the culture of being within Goldman, and how to inculcate that culture, right? And that's constantly, we have large growth, lots of new people coming in. How do we continually stay on top of that, right? And I think the kind of the challenge comes from how do you sort of meet the expectation of the speed to market, the actionability, while at the same time making sure that everyone's brought to the table, you're getting the benefit of that consensus, and you're balancing the risk with the opportunities in the market, right? And so, and obviously compliance, legal, and risk functions are sitting right in the middle of that. And so on a day-to-day basis, that's challenging, right? I love that challenge, but no matter how much you love a challenge, you're dealing with a challenge, right? And so obviously something to be attuned to. The second question was, so on Facebook, right? So Facebook and other, we're part of on Facebook and other social media, right? Twitter, Instagram. And so how do we balance that? We use that conservatively, right? There are, one of the things we look at, and it's vendor management broadly, right, is a vendor trying to get us to, does a vendor facilitating actions that we might not be comfortable with, right? Take marketing, for instance, right? Like the ability to create like lookalike audiences or targeting to all types of things that might be, that other marketers outside of financial services might use, but we are attuned to, fair lending and disparate impact, consequences of things like that, where we want to make sure that we don't have vendors that are thoughtlessly implementing elements there that would not be appropriate for financial services or for our own risk tolerance. On our marketing materials, we're making sure we're reviewing everything before it goes out the door and gets posted, right? How do we make sure that whoever's engaging with the public through various social media platforms are doing that to our policies and procedures, right? And so that was all kind of part of building the control environment for that. But sort of we look at what's appropriate for us to use and what's inappropriate for financial services, though it might be facilitated through various platforms, and that's kind of how we stay away from some of the, the broader risks of the market. But obviously, the Cambridge Analytica Facebook pings have had impact. Some of the vendors, in terms of retention, have lost their ability to connect into some of these platforms for various periods of time, and so that clearly creates cascading disruptions through our enterprise that we then have to adjust to and deal with. But for overall, our risk, we rely on sort of our risk appetite and our controls to be able to set the playing field day one in a way we're comfortable with, so as to avoid those longer tail problems.
Okay, so this clock is telling me I'm 2 minutes past time. So thank you, everyone. I'm sure if you all have questions, our speakers will be around and they'll be happy to answer them. Is that right? Yeah, sure. Okay, great. So thank you, Mitch, Brian, and Paula. Enjoy the conference.